So interesting, and I just want to use a quote that came today from the Bank of England's chief economist, Andy Haldane. He said, quote, "The situation we need to avoid, like the plague, is one where inflation expectations adjust before we do, or where we wait for positive proof that effects on inflation are not transitory before acting." And the reason I bring that up, I mean, it follows your previous answer as well, is how is it that we're in a case, state of play, where the chief economist of another very credible central bank is saying they've got to avoid that situation like the plague, but the kind of consensus view of the Fed seems to be, we'll wait. We have to have endless proof for many months before we consider tapering. I mean, again, do you have quite a lot of clashes with your colleagues on this point of view?
So you gotta remember that going to pre-pandemic, we went for years in the United States where we were not hitting our 2% inflation target, even with a very tight labor market. And one of the trends that was occurred then and is still with us is technology-enabled disruption, limiting the pricing power of business. So coming out of this pandemic, I think we've got some paradigm shifts. And it's not surprising that it's a challenge to understand these shifts. And as we do that, there's no textbook for this. You don't want to be so preemptive that you choke off the recovery. But on the other hand, you don't want to be so reactive that you're late and you're behind the curve. But that's the balance. It's not surprising in this type of paradigm shift in the aftermath of the pandemic that we're struggling to find that balance. And I think that's to be expected.
President Kaplan, there's word today that the Biden administration is calling for $6 trillion in spending, running deficits north of $1.3 trillion every year for the next several years. I mean, that we're going to need a lot of buyers, and foreigners have slowed their buyers lately. You're talking about tapering. Who's going to buy all those treasuries to finance that debt?
So spend a lot of time talking to contacts in the business sector, in the financial sector. I think there's a lot of attractiveness around the world for the U.S. dollar and for the U.S. Treasuries. And also, you've got an aging society, a substantial amount of pension fund money. So I think this is why, and Jay Powell has said this, we need to telegraph well in advance our intentions, give the market plenty of notice, and do it. I think we should be doing this when we do start to adjust purchases, do it in a gradual way. But I think there's going to be, I personally think there's going to be a strong bid for the U.S. Treasury. But I also realize that the market is going to have to find its level. And I've said many times, I think on this program, it wouldn't surprise me, and I think it might even be healthy to see the 10-year drift upward from here. Pre-pandemic, we forget already, the 10-year was at 1 3/4 to 2%. And so I think there's a point when you emerge from the crisis. I think reducing our imprint on these markets will be healthy. And yes, the markets will have to find their natural level.
Shepard Smith here. Thanks for watching CNBC on YouTube.